Welcome back to All About Money. I am Chloe Feng. Joining me today is Wang Dan, the chief economist of Hang Seng Bank China, who joins us today from the financial hub, Shanghai. We'll discuss more about the country's economic recovery as well as the public health finance. Great to have you back, Dan.
Great to be here.
And now let's talk more about the previous discussion. If we set Shanghai, where you are now, as an example, there are voices saying that the testing is worthy to prevent another citywide lockdown, just like what Shanghai went through over the past 2 months. But before we talk more about how to balance these voices, can you first tell us how much economic damages was caused by the 2 month lockdown in Shanghai?
Well, the disruption to supply chain has been very obvious. The consumption is heavily depressed as well. When we look at the macro data in April and May, we can safely say that these are the 2 lost months for Shanghai. And the spillover effect over the whole Yangtze River Delta is quite significant because cross-region transportation has been hugely disrupted. And that means the factories around Shanghai, or even in some mainland cities, if they're in, say, like the auto industry or electronic industry, they could be lacking some key components that can only be produced in Shanghai. So the April-May economic growth was very likely to be in contraction. But in June, there was this relatively strong recovery in especially investment and production. But when it comes to consumption, it's still quite weak. So it just looks like the whole second quarter might see a weak positive growth. But for Shanghai itself, a contraction is largely expected.
Right. So following the previous question, like we know that some voices saying that, the province is spending a lot of money on the PCR test, but then it will help the city to prevent another citywide lockdown and therefore to avoid another, huge economic damages from the lockdowns. So let's again set Shanghai as an example. Do you think the PCR test will be worthwhile for the city to prevent future waves?
Well, I think it will be effective to prevent the citywide lockdown. There is no doubt. But we have to also acknowledge that even with some of the partial lockdown, even on the compound level, it has caused a fall in confidence and a disruption in production. Because the small businesses in particular would be worried about uncertainty in the future lockdown. It may not happen to your compound, but it might happen to the factory area, to some other area that are quite essential to some of the services they need. So as long as there are the strong requirement for PCR test and partial lockdown in place, I do not believe the economy can go back to its full self or normalcy. And for Shanghai's economy, I have no doubt that once those measures are lifted, the economy will bounce back very strongly. It is just now we're in this transition period. The PCR test is not enough to guarantee growth.
And also, with the testing demand, a lot of COVID detection companies saw huge business opportunities. Dan, do you have any forecast on this industry's growth or the market size later on this year in the country?
I'm no expert in the COVID testing industry. What I can observe is that they have received huge support from the fiscal money. And also, clearly, there is a strong market demand. And this demand could last for at least another 1 to 2 years. So for the industry, there is a short-term boost for sure. But the long-term sustainability is still questionable. This is a very simple procedure and it doesn't require a lot of innovation. So I would say it's more like a medical cost and at a relatively low level. At some point, it will become part of those basic procedures. Maybe at some point it doesn't even need a real human to operate. So I'm not sure if the industry can sustain a strong momentum in a few years. But for the biotech industry and the pharmaceutical industry, I do see strong opportunities. They're getting a lot more private and state-backed money in R&D. So their part of the innovation would be much stronger and promising.
And also, talking about the automobile industry, we know that during the lockdown, the industry has been taking a very hard hit from the lockdown measures. And now the government also is providing some incentive for the sector to reverse its previous plunge. Dan, do you see that this automobile industry also recover gradually? And how was the recovery at the moment?
Well, there are different ways of looking at the industry because even before COVID started, the industry had been going through a slowdown period. And the domestic market was more or less saturated. And there were a very strong momentum to shift from the traditional engine cars to new energy vehicles. And this momentum still stays strong. Even with the lockdown, we see very strong growth in the new energy vehicles production and sales. But if we're looking at the whole market's demand, it would be weaker than last year. And the main reason, of course, is because it's this kind of durable consumption. And when it comes to durable consumption, it's almost similar to investment. And people have to think about their income growth, think about the future of the economy. And given the current situation where China is at, many people may want to wait it out. And one other factor is the property market. The sales of property and the sales of vehicle are usually highly positively correlated. So now the property market is still quite weak. So the sales for vehicles, including the new energy vehicle, can stay relatively weak as well. And then on the production side, I believe it would stay at a relatively strong status because the NEV R&D is still quite strong, and domestic brands are receiving a lot more attention in both domestic market and overseas market. So for the manufacturing side, I'm more optimistic than the consumption side.
Now, also with Chinese very important examination underway this week, the Chinese Gaokao, a record 11.9 million students have begun sitting for their university entrance exam. More students are entering universities, but we've already seen that the many undergraduates are finding it very hard to secure jobs. The country's unemployment rate is also at a record high. So Dan, what do you think the country should do to stabilize and to boost its labor market?
Well, the labor market and unemployment for young people would be the number one challenge this year. You mentioned the fresh graduates, more than 11 million this year. Let's not forget, there are also more than 11 million of high school graduates and 5 million of vocational school graduates. Many of them are also entering the job market as well. So how to provide enough jobs would be a very tricky question because we know the economy is slowing down. In order to create enough jobs, mostly in the cities, we need to have a very strong private sector. Now, the state-owned enterprises and the public sector, mostly in the local governments, are expanding their employment. But it's far from enough. Many of the college students this year probably won't find a desirable job in the big cities. So many of them have to go back to their hometown, either in the county or in the rural region. And those areas are not very good places to provide a proper job for them. I think one thing that government can do is to subsidize companies in big cities to first retain their workers and second to increase their hiring in certain in some segments of their business. Because if you want the companies to do it voluntarily on their own, they might be reluctant. They need to think about their profit and are responsible for shareholders. So there has to be some kind of government support to give them incentives.
Right, especially at the economic downturn this period of time is even more complicated and concerning at the moment. And before we wrap up, Dan, I also want to bring out about the airline sector. We know that the country is also, subsidizing this sector in order to boost its growth. But particularly this year, when many countries, including, for example, Singapore, Japan, they have been opening up, when China is still sticking to the very stringent quarantine measures. So how can the country's airline sector survive this tough time? We think that some airlines are still being banned to come into the country, so it's still taking a hard hit from the COVID-imposed measures at the moment.
Well, I'm afraid the airline industry might have to go through a consolidation period because it's just a simple fact. There is not enough demand to sustain the airline industry right now in China. Before COVID, I was doing a lot of regional research. On the city level, China had already been over-investing in building up their own airlines or the local airports, and many of them are empty now. And the local government are still paying back some of the old debts. And given now the very strict restrictions still when it comes to the cross-provincial traveling and the requirement of 72 hours of COVID test, it will no doubt put a damper on the demand for airlines. And when it comes to the international traveling, the demand is even lower. So the downsizing of the industry is inevitable. They have been living off the government subsidies for a while, but it's not sustainable. Then the best strategy is probably to let the industry go through this painful consolidation period, let some of the inefficient one exit the market, and then we can talk about some relatively healthy recovery when the COVID period is over.
Thank you very much for your insights and analysis, Dan. That's Wang Dan, the chief economist with Hang Seng Bank China. We'll be back on HKIBC next Sunday. I'm Chloe Fong. Until the next time.